Equities are rolling over into the bell here, the final stretch, and they're stumbling more. Lows of the day across the board. Scott Bauer is with the CEO of Prosper Trading Academy. All right, Scott, so did it just get real today?
What volatility?
Yeah.
You know what, Oliver, there's no inflection here in terms of a capitulation. And I say that because if you look at volatility across the board, whether you're looking at the VXN, vol Q, vol in the Qs, the NASDAQ space, it has not really accelerated that much. If you look at a longer term chart, like a 2-year chart, we are seeing lower lows, lower highs. Now, over the last 6 weeks or so, since that peak on December 3rd, maybe that started to change a little bit, but overall volatility is still not really expensive yet. So I don't think that we have seen a bottom. I don't know where that bottom might be. Maybe we're there, but from an option standpoint, volatility has not really spiked. And we need that to get some sort of capitulation here. So, you know, as much as we can look at this and say, okay, the S&Ps are down another 2% today, NASDAQ 2.5%, et cetera, it's almost as if this is very, very orderly.
VIX at 23 is your point, right? I mean, that's nothing too alarming.
No, not at all. I mean, again, you look at VIX and look at VVIX, which is the volatility of the VIX. Again, you're seeing a continued pattern of lower lows and lower highs. So, you know, to me, again, I'm not saying that there's any sort of gloom and doom. I'm not saying, you know, the expectation of a major capitulation is there, but we haven't seen that yet. To me, that tells me that kind of just the market is still just digesting the higher interest rate environment.
Scott, what do you think it would take to see VIX start to move? I mean, could we get subdued VIX even while the NASDAQ and tech rolls over? I mean, if VIX tied to S&P, of course, is a little bit more of a broad market reflection, could we get continued unwind in frothy tech names and see volatility reflect something different for the broad market?
I think we can until you start to see the likes of the big guys, the FANGs, starting to roll over, if that happens. You look at Apple, you look at Microsoft, even Meta, Facebook, whatever they call that thing now, and volatility there is not expensive in those names. And knowing that those are such a big component of the NASDAQ and of, you know, the S&P, I think that may be holding down volatility overall. You look at some of the security names, maybe like a CrowdStrike or a stock like an SE, maybe go into a stock like Moderna. There you're seeing some elevated volatility in individual names, but on the big caps, you're not seeing it. And you'll notice that I did not count Netflix in there because Netflix has earnings this week. And of course, we're seeing accelerated vol in there.
Yeah, Netflix has been getting pummeled here for months running, so separate category in its own. Microsoft, even despite the $70 billion deal, was up earlier this morning, or at least firm.
Yeah.
Now it's down about 2.5%. So it seems that we will live and die by these big giants that are trying to hold on right now. I mean, hopefully, if you are bullish in this market, then you see positive earnings. We're not too far away. I mean, we're going to get Microsoft in about a week. So if these companies do miss, Scott, what do you think that opens up the downside to? I mean, if we get weakness, how do you trade a down market? It's been a long time since we've had any kind of downtrend. We've had a few dips, but never a trend lower.
No, and I think it's hard to anticipate the trend lower, but once you're in it, I think what you do is you got to sell the rally. It's hard to go into it being ahead of those dips, but if that trend is to the downside, then you start selling every rallies. Just like as we've had buy the dip for, you know, seemingly forever, you start selling the rallies until that stops. Now, I wonder what's going to happen if we see a miss in a Microsoft or one of the other big guys. Are we going to get a reaction like what we saw in Goldman Sachs today? I know that's not a tech stack, but you know, is that an overreaction, what we're seeing there, down, you know, 10% or, you know, somewhere in the like there? We could see that in some of the other big names.
How does the pain stop? I mean, it's your point about the buy the dip mentality that has been dominant for a very long time. I guess there's a certain window where, hey, we could still be buying the dip here. Who knows? Maybe we'll shoot back up. But with the list growing longer now of trends, cloud stocks, stay-at-home quarantine trades, looking at now possibly, I mean, even banks, as crazy as it sounds, the chart of Goldman and JP Morgan now have lower highs and lower lows. So there's fewer and fewer sectors by the day. Does that mean that you try and chase those downtrends, or do you go for the stuff that is remaining firm, or are you just a pure crude oil trader now?
No, I don't want to be a pure crude oil trader, but
Nobody does.
Starting now. We're starting now for the first time in a very long time where the TINA trade, there is no alternative, not really there anymore, or starting to change, right? There are some alternatives now. So that's where you're seeing money coming out of the marketplace and trying to get into some of those hot sectors like the energy sector or crude, or even into the bond market now with rates, where they are, because, where else were people going to put money when rates were 1%? The 30-year was 120, or excuse me, the 10-year was 120. However, Oliver, let's all keep a really fresh perspective on this, that even if the 10-year gets to 2%, even if the 30-year approaches the high threes or so, historically, those are still incredibly, incredibly low levels. Not like what we've seen in the last, 2, 3, 4 years or so, but historically incredibly low levels. I think there is still going to be somewhat of a buy the dip mentality.
All right. What about short and bonds? Scott, you ready to join that bandwagon yet?
Not yet. I'm not convinced yet.
All right.
Definitely not convinced.
Okay. We're going to circle back for the big tech earnings, and we are going to also circle back on crude oil. Maybe the options will get fewer and fewer. We'll see if you become a pure crude oil trader eventually. Scott, thanks.
I'll let you know.
All right. Thanks for the update as always, Mr. Bauer, CEO of Prosper Trading Academy. When we come back, let's find a couple beaten up stocks.